Yeah.
Ravichandran sir, please start.
We can start. Okay. Welcome all of you to BVS next session, webinar number 116 actually. I welcome Harsha Ramnani, who is a fellow chartered accountant and a first rank holder in commerce from Kanuriya College, Jaipur. She is also a diploma holder in DISA, Information System Audit, and also a RV. And she is also has, with a certification in forensic audit, internal audit, and INDAS, BRSR, and also a social auditor, first in Rajasthan among top 10 in India. With over 15 years of experience across industries like textile, real estate, banking, healthcare, and telecom, her expertise spans over 15 years in statutory audit, internal audit, ESG reporting, valuation, due diligence, and INDAS IFRS conversions. She has contributed to World Bank funded projects, authored ICAI technical guides, and regularly writes and lectures on financial audit and sustainability topics in India and internationally. We welcome you, Harsha.
Thank you so much, Ravichandran sir. And thank you so much, first of all, to Bangalore Valuers Association. So it's my, first opportunity with Bangalore Valuer Association for the session. Earlier, I heard about, a lot with the sessions, like early morning sessions. And because I'm not kind of an early morning person, so I was not able to attend these sessions. And it was a long due for me to attend or maybe to have any session with a BVA. So today is the day for me where I'm able to have some session with the BVA. But yeah, I was hearing a lot about the BVA sessions, that how it is happening, and every time on every Saturday it's early morning sessions are happening. So it's my opportunity and a privilege to be there with all of you. And yes, today's session is, I think, important for all of us because it's all about the peer review observations. And being a registered valuer, or maybe being profession in any particular domain, like I think we all are in a respective, our profession also have a peer review happening in any time, like CA, CS, CMA, whatsoever in a profession we are having in our practice. Also, we were having a peer review happening in our office. And after the registered valuer also, the same process we are also experiencing every year, or maybe in a 2 year or 3 year of a period. So I always take it is happening for the betterment of us. It is not someone who is coming to, give us something like this is we are not doing right, or this is something not, have done in a right spirit or manner. They are pointing something which is not being done in a previously right in our reports, so that in our upcoming reports or upcoming assignments, we can do better, or we can make up our assumption in a proper manner. We can do the assignments in a right manner or spirit. So today's session is just to have understanding how peer review is happening, what is their perspective, and how we can improve ourselves in terms of what exactly peer reviewer, who is all about finding of peer review workshops, and how they are seeing our reports, what is their agenda, what is their objective, and how we can improve ourselves for our upcoming evaluation assignments. I request all the participants who all are there, just feel free to share your thoughts, your experience with respect to any time if you have experienced the peer review in past, or whatever the queries or whatever peer review observation we see on screen right now. Not necessarily it's our observation, probably the other valuer observation. So what your point of view on that you can share during the session. So let it be an interactive session. You share your thoughts, I will share my thoughts, so that we can understand what exactly the regulator is expecting from all of us. The content for the today will be like, first we understand the key consideration, like what regulator is actually expecting from us, what are the key peer review parameters, on which any particular regulator is coming for the peer review purpose. Just a brief view on a Rule 8 of companies registered value or valuation rule. Although I understand we all are aware about this rule, but still I just wanted to have just a view on Rule 8.3. Then, important aspect, a key aspect consideration in a peer review of the valuation reports. What are the key consideration aspect which is considered in the peer review of the valuation report? And then we come on the important point. What were the common findings of the valuation reports in last few peer reviews, which have observations we will see on the screen. There will be common points also we will see on a screen. We will discuss in detail. Findings we will discuss in detail, and then recommendations also we will see that what can be the recommendations so that we can also improve ourselves. And at last, final keywords from my side that how we can improve ourselves. So when it's come to peer review, what exactly it means? So peer, I think we all understand it means person of the similar standing. Like today, if I talk about this group who is attending this particular, webinar, I am also registered valuer, you are also registered valuer, everyone similar standing. And review means re-examination and a retrospective evaluation. So whatever we have done in the past, it is if someone is coming for a particular quarter, if Ravi Chandran sir is coming to my office to review that or re-examine that, that will come considered as a review. So because Ravi Chandran sir can be considered as my peer because he is also a registered valuer, I am also a registered valuer, and if he is reviewing my valuation reports or re-examining my valuation reports, so that can be considered as a peer review. So basically, it is an examination of professional performance, my professional performance or practice in a particular area. So I'm just here talking about our valuation practices, not any other professional practice. The respective other practice we are not talking about here, or a particular area by another professional in a same area. So a same professional will review our same professional practice. And the objective of this peer review is to help the professional under review to improve their performance, their decision making, and adopt the best ethical practice and standard. Purpose is always to have improvisation. It is not a purpose when that someone wants to point out your mistakes. So if I am going to review any other work, my purpose is not to point out mistake that you have done this wrong, you have done this wrong. Purpose is to give them opportunity to improvise in a future practice, to give them opportunity to adopt a best ethical practices, to give them opportunity to improve his performance, the decision makings practices, comply with the relevant laws, establish the standard and principles. So this is a overall purpose of or objective of a peer review. A peer review discussion is among always in equal peers, not hearing by a superior body or by a hands down or the judgment of punishment. So here the objective is not to give any punishment to any other peer. So anytime if someone is coming for the purpose of peer review, there should not be any fear that, oh, there will be someone come or review my work or there will be some punishment if some particular fault or some problem will be seen in my reports. So there will be no particular punishment until unless gross negligence will be observed in our work. If gross negligence will be observed in our work, then there will be a different scenario. So that should be considered and should be understood by clearly by us that peer review is all about improvisation. It is better for the betterment of us. When I'm talking about peer review, so it typically involves the examination of, first of all, my valuation methodologies, what kind of the methods we are using for the valuing of asset, such as all the approaches. So there are 3 approaches generally that we apply. So generally we need to give the reasons which particular approach has been used, other approaches which are not being used, so what is the purpose why that the other approaches are not being used. So peer review generally checks the purpose, application, appropriate selection of the approaches and the methodologies. Assumptions and the inputs. So valuation is all about, assumptions, inputs. So that evaluation of the assumptions made during the valuation processes, including the reasonableness of the financial projections, market data, and risk factors. So it is, the review of our assumptions, inputs, the financial projections, the other, valuation processes, market data, risk factors that we consider in our valuation process. Consistency with standard. So whatever the standards we are applying for the valuation process, ensuring the adherence of the Valuation Standard Council or ICI valuation standard, whatever we are applying for the purpose of application, that consistency peer reviewer needs to see whether consistency is there or not. Accuracy and completeness. So in complete report, purpose of peer reviewer is to verify that all data calculations are correct and complete. Many times it has been observed that calculations is being are incomplete, or maybe not correctly being calculated, or there are potential errors or omission has been addressed. Just to share with you one example, I'm a valuer for the SFA class, Securities and a Financial Asset, and whenever it comes to the CCPS, I always, being in a field like what kind of the term and condition is
Ma'am?
going to come in front of me.
Harsha ma'am, your voice is cracking, ma'am.
Sir, we are unable to hear you.
How? Sorry, what you're saying, sir?
Hey, Harsha, your voice is cracking. I think
We are
there
unable
is
to
some
hear
network
you.
problem.
Just give me a minute. Let me check my internet connection.
We just lost 1 minute of yours actually. You have to rewind.
Okay. Just give me a minute.
Yeah, sure.
Okay. Now it is clear.
Sorry,
Yes, ma'am.
now it's okay.
Yeah. And I think the screen is now visible again.
Like just you are sharing now.
Yeah, I again shared.
It has
Yes.
come.
So I was saying that being SFA class valuer, there are multiple times we get a CCPS valuation, and whenever the CCPS valuation is coming to us, I always have a fear with respect to how it is going to convert in a equity share, because the terms and condition to convert the same in equity share is like many times we see a very type of the conversion terms. So that very type of conversion terms gives us a goosebumps in terms of how it is going to be converted. Because if it is a simple terms that this is the formula to convert the CCPS into the equity, then it is easy for me to calculate my valuation or to have a proper fair valuation of that CCPS. But if it is a very complicated formula, or if it is a very complicated terms and condition, then it is a difficult task for me. Like in one example, there was a term very specifically which mentioned that this CCPS is going to convert in an equity share after 10 years on a value 3% of a plus my CII index of that year. And now the CII index of that year is, I'm not in a situation to calculate because that will come after 10 years only when the income tax department or CBDT is going to issue. So if today I need to calculate the fair value, how I can, derive that CII index? And to my surprise, I got one valuation report also from previous valuer, because I got that valuation assignment 2 to 3 years after, because before that they were getting from one of the valuer. A particular report has calculated the CII index also after 10 years. That if today's CII index is 363 for 23-24, if CII index is 363, then after, on 2032, my CII index will be this value. And I was like, how it can be calculated? I tried to, understand from various options, from various modes. I, discussed with various valuers that is there any way out, that can we calculate the CII? Is there any option? I, Google from CBDT website. I try to do the chat GPT. I try to, go with the various modes, but I was not able to get any option where, which can give me a comfort that I can get a CII value of 2032. What happened if government say that again we will start from 100 base year, because that already happened in previous also. So that kind of the condition sometimes gives us the complications in the valuation, and we need to find out a way that how now we can get a fair value, because unreasonable conditions can, give us, sometimes we can be in a complicated situation, or if someone is going to review our report, that gives us a question mark how we calculated, because I was not in a comfortable situation to review that report, that I am not in position to calculate CII index of 2032. I cannot do that. If government has not issued that, what is the basis? How I can calculate that what will be the inflation after 2 years or 3 years or 4 years? I am not in a position to calculate or to assume that or presume that. Probably Ravichandran sir or any Somarajan sir, can you assume that what will be the inflation after 4 years or 5 years? We can take a basis of previous 5 years, that this was the inflation. Based on that, somewhere we can have an assumption, but still there can be other factors also. So average we can take, but there may be other factors. CII probably you or me cannot calculate, at least for after 5 years or 6 years. So that assumptions, consistency, accuracy, completeness, that we need to consider very carefully. And clarity and transparency is something that we need to ensure in our report. So whenever the peer review is happening, I think these are the parameters which generally they observe, and based on that they give their observations. These are the key consideration which I have taken from the ICAI RVO peer review parameters, that they generally, whenever the peer review is happening, how they are doing the peer review in terms of consideration. So requirement of the peer review is generally they are ensuring the compliance of companies registered value valuation rules 2017, ICAI and IBS part, other applicable rules, guidelines, regulation issued by IBBI. So this is the primemost requirement. Then they are ensuring that their valuation report should contain Rule 8.3 format. So this is just a, valuation report format as per Rule 8.3: background, purpose, identity, disclosure, date of appointment, valuation date, date of report, inspection, nature, restriction, major focus, conclusion, and keyword limitation, disclaimer part. Just copy paste of Rule 8.3 part. And then at last, to check the requirement of Rule 8.3 met, ICAI valuation standard, applicable valuation standard, scope of work, to check Valor has placed reliance on the valuation report, some significant deviation and variation from the standard. So this is most important for all of us, because most of the report are not mentioning that if there is any significant deviation or variation from the standard is there or not. To check whether the comprehensive narration report or abbreviated summary is forming part of the valuation report. This is again many times we are not mentioning in our report. Whether the information of intended user of valuation report provided, and to check whether the compliance is sufficient to the communication of intended user. These are the requirements generally peer reviewer trying to find out in our report. This is the parameters or key consideration peer reviewer trying to find out in our reports. So now this is the background, what exactly peer review try to see in our reports. Now we'll see what kind of the observations, purpose I think we already discussed, so probably this we do not require to discuss in detail. The purpose is to improve the quality, credibility, transparency, imparting knowledge and skills, and the quality of performance. Now we'll see what kind of the observations are being observed by the peer reviewer in past, because whenever the peer review is coming, they are observing someone, and whenever it comes to the valuation, generally what I have observed, our whole focus of the business is on look on the right number. I think you all are agree with this. Whenever any valuation assignment is coming to us, everyone wants to see look for the right number. What we all ask about, what exactly number you want from us, right? Valuation assignment, what is the number you are looking for? What is the value you are looking for? That is something, a question generally we ask. Okay, this is the value we are expecting. This is the number we are expecting. But this is not a whole story actually. It is just a start point or a starting point. Generally, the story is starting after that only. So now let's start with the observation. What exactly is the observation is being observed by the peer reviewer in past? What type of the observation they have observed in past? We'll see one by one and we'll discuss whether we have also, we also did the same mistakes in our report and how we can improve that. So there will be 3-4 slides now from my side, where you will find few mistakes or few, observations. So first, from first slide, first was scope of work was vague and relevant details were not incorporated. This is something a very common observation and regularly being part of the peer review observation. And it is from the day one. Almost 3 peer review already happened, and all 3 peer review is having this observation regularly. In first peer review, it was observed in many reports, because that was the first experience for all of us. We all were new for the valuation domain, so probably we were not able to understand how to draft a scope of work, and we were not able to draft it properly. Later on, gradually we were learning from our past mistakes, so now we are properly drafting. But still, scope of work is something we need to draft very properly, that this is a scope of work and this is the relevant details for the scope of work we have requested from the client for the purpose of valuation. So this is a common one of the finding of the peer review from last 3 peer review workshops. This is a combined observation. I have not made a slides that from first peer review, second peer review, or third peer review. Combined findings of the peer review we are discussing here. Okay. Second was appointing authority was not stated. This is again important for all of us. In many cases, there are different appointing authorities. For the regulatory purpose, many times we have been appointed by board of directors. Many times we have been appointed by management. many times we have been appointed by legal authorities, some other party is appointing to us. So in our report, we need to clearly mention that who has appointed us and what position, or in what particular authority, that we need to clearly mention, so that whosoever is reading our report has a clear understanding about the appointing authority and can make a clear understanding that under which position we have been appointed and whom we are addressing our report. Third observation was, report stated that valuer takes no responsibility for data presented in report. Now, this, can we do that? That whatever data we are presenting in our report, can we state that we are not responsible for that data?
No.
What, even though we are taking data from the client side, okay, the projections or whatever the data, ultimately the report we are presenting, the report is our responsibility. So we cannot write even in a caveat limitation or a disclosure part that we are not responsible for the data presented in report. Because if projections we are taking from the client, a reasonable due diligence is our responsibility. We cannot state directly that we are not responsible. We can mention that we have not audited that projections, but a reasonable due diligence is still expected from us. That okay, we have reasonably reviewed that it is not completely vague projections. We cannot say that okay, I was able to see that my last year revenue was 100 CR, but projections what they have submitted to us 1000 CR next year. So I am okay with that, because my responsibility is not to vouch that or not to audit that. It is my responsibility to ask them that how you will achieve the 1000 CR revenue from 100 CR last year to next year 1000 CR, because that is my responsibility. अगर मेरा if my manufacturing unit is having a capacity of 100 CR, how I can produce the 1000 CR revenue, that is my responsibility to ask. So this we cannot state in our report or responsibility. We cannot deny the responsibility of the data presented in our report. So whenever we are drafting the caveat limitation and disclosure part in our report, that also we need to draft very carefully, that we cannot deny the responsibility of the data that we are presenting our report. Fourth one is adherence and compliance with valuation standard use was not specifically stated in report. So that was the first peer review finding observation, because in first year we were not specifically aware about that how to draft the particular section. So in maximum report, it was not somewhere quoted that this particular section is being in line with the particular IVS or particular thing. After that, gradually the Valors has started quoting the particular IVS part in a relevant section. So gradually we have improved. So this particular fourth point is from first and second peer review. Gradually we have improved. Absence of supporting evidence and analysis. So how the peer review reports can present, anyone can review the absence of supporting evidence and analysis. Are we presenting any analysis in our report? Generally, how we present in our report? Any idea from any of the participants?
Yes, we do present.
So, for example, if we are calculating the cost of capital or cost of debt, how we are presenting that?
We're showing the calculations how we have arrived at the cost of capital, or where from we have received the what do you call the industry risk rate
Rate or
or
market
whatever
rate,
it is.
how we calculate
Generally,
it?
we take from the what do you call the Damodaran's forecast or GDP growth rate. What is the source for it, etc.
So that all supporting evidence analysis we need to present in our report. We
Supporting
are
evidence.
not supposed, sorry,
No, supporting evidence means we'll provide the source. Now suppose
source
it's a
document, yeah.
risk-free rate of
It
return will take
is
or market
not,
rate of the, yeah.
yeah, it is not expected from us that just directly mention that as on 31st March 2025, my risk-free rate is 6.58%.
Okay.
It is not expected from us that directly we mention in our report and full stop. I need to mention the source. I need to mention all these details, that how I derived the 6.58, whether it is my continuous RFR or my year-end RFR, how I derived that. So that detailed analysis, my supporting evidence, my source of data, all this I need to mention in my report. So that is something I need to mention in my report, so that whosoever is reading my report or referring my report understand each and every aspect of the report. Otherwise, my report is incomplete, because every time, not necessarily that registered valuer is only referring the report, or any financial professional is only referring my report. It can be referred by any non-financial professional or any other person. Sometimes court is also referring my report, or any other non-financial person is also referring my report. So if any non-financial professional is referring my report should be self-explanatory. Any other person can also able to understand what exactly I want to communicate with respect to the valuation perspective. Next one is date of appointment, valuation date, inspection date, date of report, including in the majority report. But some of report has been observed that date of engagement, inspection are not disclosed, and there are inconsistencies in the date. So there are multiple dates generally we include in our report. Majority of the reports have date of appointment, valuation date, or date of report. So these three dates generally we have. In terms of, if I talk about the land and building valuers or plant and machinery valuers, so they also need to mention the inspection date. So these are the certain dates which should be clearly mentioned in our report. In initial report, peer review findings, first peer review or second peer review, it was observed that these dates were not clearly mentioned. Gradually, we improved and we started mentioning all these details clearly. But again, in some reports, there was, some mismatching, there were some inconsistencies in reports which were observed. So that somewhere we need to improve whenever we are submitting, because what happened exactly, whenever we are submitting our draft reports for the review, some changes happen later on, dates sometimes change happen, or sometimes on a first page you change the date, but on a middle of the page or a last of the page we forgot to change the dates. So that we need to ensure that we are changing our dates on each and every section wherever it is required. Identity of the valuer and other experts involved in the valuation is not mentioned. However, in some of the reports, unclear as whether the assignment is executed by CA firm or the valuer in his or individual capacity, largely because of the letterhead used and a reference used at the multiple places. What exactly it want to convey? Can a CA firm execute any valuation assignment? Yes, no, maybe.
Depends
Any of
upon
it?
under which act we are doing the valuation.
Okay, so what I understand is apart from 11 UA report, CA
No,
firm.
even if we are doing the transfer pricing report under Rule 10AB, then also
Yes.
CA letterhead would.
So apart from income tax, for Companies Act, CA reports are not allowed.
Yeah, I agree with. For FEMA also we can do CA.
For FEMA also
For
we can do.
Companies Act, yeah, but for
Yes.
Companies Act, RB is required.
Yes. So when we are doing in an individual capacity, that should be clearly mentioned that this report is in the terms of individual capacity as a registered valuer capacity. If any report we are doing as a CA firm, as in a capacity of partner under a CA firm, that should be mentioned clearly in a partner capacity. So that clarity should be mentioned in our report. So identity of the valuer or any other expert involved. Many times there are multiple assignments we execute where we have plant and machinery valuer also with us, or we have land and building valuer also with us, or sometimes we also involve any other expert for the valuation purpose. So their identity also we need to involve, include in our report properly, so that report is clearly mentioned about the people who are involved in our valuation exercise with their proper identity. What also we have started doing in our regulatory report purpose, specifically for the Companies Act, because what happened exactly for purpose of the issuing of the share, when you are filing ROC forms, then in that case you need the membership number of the CA also and PAN number also. So now we also started mentioning the PAN number and membership number also in a valuation report itself, so that in that case person is not required to again come to us that what your is membership number and PAN number. So for the regulatory report, that also we started mentioning in our report. So based on your experience, you can improve your reports also.
But
Okay.
is it necessary to mention the PAN number?
So not necessarily. I'm saying that based on experience. So that we started only for the regulatory report purpose, just for the Companies Act.
Okay.
So based on experience, you can improvise your report. If it is the FEMA report or maybe income tax, that in that report also we are not mentioning, because I know that they are not required these details for the purpose of anything. But for the issue of shares, when they are filing the firm with ROC, in that case they need for the purpose of filing. So again they come to us, they ask what is your membership number, what is your PAN number. So just to save time, we are mentioning the same in our report. Then structure and formatting of the report not as per rule 8.3. So that I think we need to take care, and we all are very well aware about the same. Valuation report are only mention the fee for engagement is not contingent upon the result reported. It does not specifically cover the independence and conflict interest covered in the engagement letter. What is your view on this part? What exactly they want to convey with this particular point?
It is not a
And
success
how,
fees.
yeah, so how they, you take care about your independence and conflict of interest covered in the engagement letter, or somewhere you also covered the same in your report also?
In the report, we cover that we are an independent valuer and there is no conflict of interest.
Okay.
But the
So,
engagement letter, they don't mention actually.
okay. So, personally, how we do, we cover in engagement letter as well as in report both. Engagement letter also we mention about our independence and conflict of interest. And in report, in executive summary, we mention in one paragraph with respect to our independence and conflict of interest. For independence, we have one particular paragraph where we mention that our fees is not more than 5% of our total fees from this assignment. So that kind of the paragraph we have. Let me show you on a screen one report paragraph I can show you. Just give me a minute. Like how we mentioned. Just a minute. So here, this is how we mention, like, the total fees include the fee of assignment earned from this instructing party is less than 5% of the annual turnover. So this is how somewhere independence we try to, make a part of executive summary. And in disclosure part, here we mention that we are not aware of any existing conflict or a potential conflict of interest, either on part of the firm or an individual member of the valuation team assigned to this project, which would prevent us from the providing independent, objective or unbiased opinion on the said valuation assignment. The principal signatory of the report has not continuously been the signatory of any other financial transaction or advisory. Further stated, undersigned is not relative associated or associated with the company, no responsibility to update the report of the event. So that also we mentioned, and it, because it is just mentioned in the executive summary, so we are mentioning that this report should be read with the assumption, caveat and other part. So this is how we are adding the report. Yes, sir.
Hey, should you say this 5% and all, Harsha?
Yes, sir.
But I mean, you are stating that it is not more than 5%.
Yeah, sir, just it's from our side, like 5% I have taken as benchmark as an independence.
Good morning, madam. Is it IBS standard or is it?
No, sir, from our side, I have taken this as a benchmark because
Okay.
just for the independence purpose, that this is something we consider that we are independent from the assignment.
No,
You can take it as a 2%, 3%,
no,
maybe 1%.
percentage doesn't matter. Doesn't matter percentage. Assuming as a valuer, I do only one assignment per year, which means it becomes 100%. Okay. I might be having other jobs. I might not have got any IBBA assignments or any other assignments with regards to valuation. I might be doing chartered engineer services. I'm a P&M valuer. Okay. So 5% of the total what?
Annual revenue of
Okay. Total sum of all. Okay. How does it relate to independence of the valuer?
So
Valuation.
if the 5% of my total revenue is coming from one particular assignment, so in that case, if whenever I'm interacting with that particular party or client, I am independent because I may probably not being more inclined, my
Attached.
discussion independent. But if I'm getting 50% or 60% of the revenue of my total revenue from that, so somewhere I will be more inclined towards them. I will be more little bit feared in terms of whenever the discussion is happening, that if I will not be agree with their responses, or if I will not be agree with their requirements, I will lose my 50% or a 60% of the revenue. So
Okay.
that's how somewhere I'm trying to give my independence, that it is not more than 5%. You may, if it is 2%, will give more independence to the person, or maybe 1% will give more independence. So 5% I just given as a judgmental benchmark for the purpose of independence.
Is it only for the financial valuation or for all LHB, P&M and
For financial, all as a firm or maybe as my individual practice, as I mentioned.
This is some separate wording which you have inserted from your side and does not correspond to any kind of IBS standards.
No, it is just to give comfort on the independence. It is not mandatory wordings from IBBI or any IVS. Just to ensure my independence, to give comfort on the independence, we have added this particular paragraph. There may be any other payout also to give the independence, like other para also, which I mentioned in the executive summary, that will also give the comfort on independence part. If you do not want to mention that 5% para, that is completely fine. That is the additional comfort from our side we are giving to the regulatory or any other body.
Okay. And it is just a declaration. You don't have to provide any kind of supporting evidence for that. Or are you providing supporting
If
evidence?
someone asks me, so if any peer review body is coming, that they can always, review our financial statements or something. So that always being taken care. So that is
Okay.
always a true and fair from our side. We are taking care of that part.
Okay.
Yes.
Thank you,
For
ma'am.
reckoning the income, do we have to take other income from other sources like pension or salary from elsewhere? Or
Sir, we are working as a firm, so it is not on an individual.
okay. Say in the case of individuals, say like interest income or dividend or any other income,
That should be considered as your professional income, for 5% of your professional income.
professional income only.
Yes.
Yes.
Okay.
But if you are not comfortable to add, so you can skip completely. Madam, it is just from we consider that it will give more comfort to the regulatory body or if someone who want to see independence on our part. So that's the reason we have added. If you do not want to add that, so you can completely skip that part. Then important definitions were not there in report. This is again one important aspect because in report, we also need to add definitions with respect to whatever we are using for the purpose of valuation. For example, fair value, market participants, then, we use base, premise, everything. So that definitions also from respective Ind AS or maybe respective IVS or maybe respective other section, we should always quote in our valuation report because that will always help to the reader to understand what we want to quote or we want to give them message. Otherwise, you or me as a professional understand what is the meaning of fair value or what is the meaning of premise or what is the meaning of base value or something, whatever the sections we are quoting. But any other non-professional or a legal part, if I talk about, or when it is, we are submitting our report on any legal court, probably they always want from our side to what exactly we want to convey in terms of the fair value or the premise or something, any other particular section where whatever we have used in our report. So that we also need to ensure. I'll show you again on a report part once we, discuss 2-3 points also in a report. While the nature and the source of the information used or relied upon was stated in the valuation report, the financial projections were not included in the source of the information. So this is again purely, I think, particular report was skipped to the ad. That again, we need to ensure that whatever the information we are using for the purpose of the valuation, we need to ensure that we mention in the scope of work in the source of information. So if as a SFA valuer, I'm working on any, DCF working or any other part of that, I'm using financial projection. I should not skip to mention in my source of information that I use the financial projections. So I think that was one of the kind incident where particular report is skipped the financial projections. The term approach and methods are used interchangeably. So that is again the kind of mistake. I also did the same mistake in 2-3 reports. So I can understand that it can happen because it was happened from my side also. Because many time it happened like we are making a section where first we are explaining about the approaches, then we start explaining about the methods. But in a flow, when we are explaining, methods is being, interchangeably used as an approach is being used as a method. So it always good practice whenever you are drafting your report, then give it to someone else in your office to read it carefully, who understand the valuation, so that whatever the mistakes we are doing in a drafting, that can be rectified before the giving the draft to the client. Because that kind of the mistake can happen when we are drafting a report which is 20 or 30 pages report, and where a lot of content is there. Past date, company background, and key assumptions of the projections are not provided. So this is an important aspect, and now this can be taken care with the help of AI. And how it can be taken care, earlier I understand it was little bit difficult, because many time what happened, we were getting a data in a PDF format, and it was a tedious task for us, where we need to somewhere extract the data from the PDF, and sometimes from the scan PDF, and difficult to get it incorporated in a report. But now when we can use AI in a proper manner, you can very creatively create a background of the company, industry inputs, past data, market insights, and key projections, and everything with the help of AI. If you have paid chat GPT with you, that is going to help you for the purpose of valuation, in a way which probably you cannot think upon. I show you one section in my valuation report, where the section particularly I created with the help of chat GPT, and that sections was created by them. Probably if I want to create that section, it is probably a task for me, at least not less than 10 days or a 15 days, because for that, if I need to read 500 pages complete terms and condition of that non-convertible debentures, because that valuation was corporate guarantee of non-convertible debentures. For that, client has given me 500 pages terms and conditions, and that was listed on BSC platform. So just think upon the situation. I need to first understand the 500 pages terms and condition. Two listed companies has given the guarantee for that company. I need to understand all the aspect, what type of the listed companies are there, what they are doing, how they are doing, what is the transaction, how it is going to help that company. And then I need to draft it that. So how much time it will take for me to first understand all this, then accordingly I need to draft the whole story for the purpose of corporate guarantee, and how it is helping a particular company to get a guarantee valuation. But when I used the AI in a proper manner, it gave me a particular section in a way which helped my report in a way which probably if I want to draft it, I can draft it in a manner, but not in that manner which AI has given me. I just show you on a screen. Just give me a time. 1 minute. And whatever the reports just I'm showing you on screen, just give me, pardon me, I will not be able to share with you, because all these reports are for the clients. So I'll just show you for the purpose of example. So I hope you all understand that. So this was the case. This is the listed NCD, which you can see on the BSC platform also. So this particular section I drafted from with the help of AI. The document which they have given me is the 500 pages NCD document. The document corporate guarantee was the listed corporate guarantee, registered corporate guarantee. And there were two companies. This project state, Prestige State Project Limited is again a listed corporate guarantor, listed company, and other company, Vellore Estate, is a listed company also. So this particular section is being drafted with the help of AI. Now, if I need to draft this section with the help of, without the help of AI, probably it needs a time a lot, and this I drafted in a 1 day. So with the help of AI, it gave me a complete detailing what actually happened, what is the interplay, credit enhancement structure. If you read it, the credit enhancement structured as a two parallel corporate guarantee from a JV partner, debenture trustee, benefit of NCD holder, characterized as an unconditional irrevocable debenture trust deed. So it has given me everything. What is the financial risk profile of the borrower and what is the need of guarantee, why it is required, give me the complete understanding, high leverage funding dependency, project execution, market operating risk, credit rating, sponsor financial strength, comparable transaction market insight. So everything is being, given. So that's how it helped me. You can draft with the help of AI.
Yeah, hi.
Hello, sir.
Yeah, so related to the assumptions, so do we need to mention only the assumptions which are not commensurate with the past historical data, or we need to make also mention all the assumptions?
So whatever the assumption you have made for the purpose of valuation exercise.
So for projection also, for example, if we are projecting the revenue like 30-40% jump, or if there's a terminal growth, what we have assumed. So we need to
Yes,
provide the
yes.
backup for backup in the sense that these are the assumptions we have made.
Yes, so whatever the assumption you have made for the purpose of valuation exercise. So for example, for the DCF calculation, like even though very simple example, like tax assumption 25.17%, tax we consider, that you or me even know that this is the
Yeah.
tax generally we consider. That also we need to write as an assumption that this is the tax assumption we considered. So small.
Okay, so any template or any model report which for assumption or any of this which you are suggesting, so any model report which we can go through that to understand that okay, all this would be required in our report.
So as such, any model report I don't have, because that generally we need to draft on case to case basis, because whenever the case is coming, like for example, if it is a DCF case or if it is an impairment case, even I need to review the projections also. And projections also I need to review, and I need to give my reasonableness thing, that I have reviewed the projections, and based on that I considered the projections whether it is reasonable or not. So that also I need to draft. Assumptions also I need to give, that I have reviewed, these are the assumptions for the purpose of my DCF which I considered. I just show you again on a screen, just 1 minute.
Because I
hope
have gone through many of the listed companies' valuation reports as well, but I have never come across the assumptions.
just 1 minute, sir. I'll show you.
Thank you.
So this was actually an impairment case.
Okay.
So for impairment, first we need to give a complete commentary about the Ind AS 36, what exactly Ind AS 36, talks about for the purpose of impairment. So that also we need to explain, because reader is not going to understand what is the Ind AS 36, what is the carrying amount, what is the fair value less cost, recoverable amount measure. So all the important definitions that we discussed in previous one, one of the observation as I was. So this is one of that example. Then indicators, what can be the indicators? Then what are the significant indicators for this impairment also, that I mentioned in the report, that why the impairment is required for this company.
Okay.
Then valuer assessment for the projections. So whatever the projections they have given, what is my assessment for that projections, whether it is reasonable, how it is reasonable and appropriate for the purpose of impairment testing. So that
Okay.
assumptions, assessment also we need to give in a report. So
But-
this on a cost assumption, profitability, non-operating items, revenue projections. So based on that, you can make your pointers when you are reviewing the projections. So your assessment you can give based on the pointers that this is how I find out the projections reasonable and appropriate for the purpose of valuation or for the purpose of impairment, whatever the exercise you are conducting.
Mhm.
And then I just copy pasted the projections which I considered. Then key consideration for the impairment testing, what I considered here. And then other key condition for consideration and assumptions. So
Okay.
these are the conditions which I considered. So that I mentioned here. This is the period which I considered for the purpose of impairment testing. Other than current assets and like impact has been assumed constant while calculating the non-working cap NWC. Long-term growth rate, respective cash generating unit has been considered as per management declaration. Non-working capital figure is perpetuity has been considered as a constant level. Valor considered 10 years government bond rate as a risk-free return. So every small item you need to mention in an assumption. So RFR, because for risk-free rate also we have a multiple source of option. You can consider the investing.com, you can consider the CIBIL, you can consider any other option. Whatever the option you are considering for your valuation purpose, just mention in your assumption that this is the source I am considering. What is the terminal growth rate? What is, average cost of debt you considered? What is the basis of that average cost of debt? So
Yes, so madam, this is all okay. This generally everyone gives it, but in terms of the projection, in terms of the what the revenue forecast we have done, what is the kind of the capex we have assumed, what is the kind of the working capital we have assumed for each year. So do we need to put those assumptions as well?
basic reasonable assessment we need to give that, because projection client will provide.
Yeah.
Assessment is our responsibility. So
Yes.
whatever the assessment you have carried out, that assessment you should give in your report.
Okay.
And not
Okay.
necessarily detailed assessment. 2-3 liners, 4 liners is also the sufficient that yes, basic assessment we have carried out and this is the background of that assessment.
Okay. Okay. Thank you.
Then 2 signing dates. So this was again one of the example. So that was the, clearly the mistakes from the valuer side that 2 signing dates cannot be there in any particular report. So that we need to take care. Limitations in form of non-availability of the projections were addressed by ignoring the income approach of valuation. Some more justification. So many time it happened like generally what we write in terms of we just write why income approach has not been used because projections were not available. So this cannot be only a reason for not applying the income approach. We also need to mention a clear reason that because it should not be the only reason for non-application of the income approach. It is a limiting condition, or maybe somewhere you also need to mention that then it is impacting your valuation, and reader, or you need to caution the reader also that if projection is available, in that case, sir, if you can mute yourself.
Vijay, are you there? Can mute everyone else. Mr. Senthil? I think voice is coming from Mr. Senthil. Yeah. Mr. Senthil, can you mute yourself?
Yeah, yeah.
So, if non-availability of the projection is somewhere limiting your valuation exercise, so more some justification you need to incorporate because that can impact your valuation. So you need to elaborate more in your valuation report, and limiting conditions you need to elaborate more in your valuation report. Limiting conditions that directly affect valuation were not clearly stated. So that again we need to take care because that can impact your valuation drastically. Valuation approach management certified projections were used by the valuer.
Harsha, 1 second. What exactly do you mean by limiting conditions? Can you explain? Because if this is a peer reviewer's approach, what exactly can you be more broad
Limiting
to make us
conditions,
understand?
like many time it happened that there are certain informations which generally we need for the purpose of valuation, but client is not able to provide us. And that's the situation where we are not able to perform our valuation, with full of details, and which limiting our valuation, and we are not able to get a proper answer or maybe proper valuation exercise carried out. So if someone that kind of the condition is happening, for example, they are not providing us a projections. Because of that, we are not able to apply the income approach and we are applying the cost approach or the market approach. So that will going to impact the valuation numbers. If they are not able to give us cost of debt, then it is we are need to get any assumption based on the market available data. So that limiting conditions directly affecting our valuation if we are not mentioning direct properly in our report. For just like I mentioned in my report that 8.75% I've taken based on the management representation, because they have not taken any loans or they have not taken any debt. So how should I take any cost of debt? Or maybe if they have they have made any inquiry in a past from any bank, so what kind of the debt they have, any particular. So any limiting condition which can affect your valuation, whatever it should be stated in your report properly, and that management representation should be there and management remarks should be mentioned in your report clearly, in assumption that this is the condition. It was 8.75%, my cost of debt is again impacting my valuation number. What if I am not taking 8.75, I am taking 9.5, that is also going to impact my valuation number. If I'm taking 10.5, that is going to impact my valuation number. So that limiting condition I need to mention my report clearly in assumption or in any other section wherever I find a reasonable or place for that. Then valuation approach. So if I'm taking a management certified projections, so procedure as we already I think discussed performed by the valuers, especially with the respect of projection provided by the management. Reason for not considering certain methodologies, current state of the operations and financial as at the valuation date. So that we need to take care. So reasonable due diligence is expected from us. If I'm not using any particular method, so that I need to mention that why I'm not using a particular method. Like for corporate guarantee valuation, many time you will not be able to use the BSM Black-Scholes method or any other particular method, because client will expect you to use the binomial or Black-Scholes, but because of the condition it is not possible for you. So sometimes you use the credit spread method or the ECL model. So reason we need to mention that why you are not able to apply the Monte Carlo or Black-Scholes method, and why you are applying the interest differential method or any particular method, and what financials we are using on a valuation date, that also we need to clearly state in a valuation report.
The limiting conditions affecting, sorry, the previous screen actually. Is it mandatory actually?
Sorry, sir.
The previous screen, that limiting conditions affect the valuation.
That it is mandatory because that always affecting our valuation numbers.
So if it is nil, we have to say nil, is it?
It probably what I understand from my experience, there are always a certain limiting conditions which you will get from your client side, because it is not always that client always have everything with respect to the valuation.
You put it as a paragraph, is it? Limiting conditions like that.
Sometimes as a paragraph, sometimes as a pointers. Based
Okay.
on the case to case basis we apply.
Okay.
Then again, few sections like it is just a pointers. Full year cash flow was considered, whereas my valuation date was 15th February. So that is again a error part from a valuation report side. It cannot be a happen. COP number was not mentioned, so I think that now we are taking care of. COP number is mandatory for us to mention. Purpose of the valuation was not clearly stated, so that generally I personally prefer to mention on a top of the report why I am preparing this report, because this is how I should start my report. Value have not clearly stated
Harsha, here I want to come in. See, for example, if there is a issue of shares, okay, so whether my purpose of report is issue of shares, or should it also continue with private placement, preferential allotment rights, whatever. No, what do you feel is the purpose? If I just mention issue of shares, is it sufficient?
Yeah, what is the whatever the purpose of the share purpose of the report, that should be
Purpose
clearly
is issue of
mentioned.
shares. My query is whether I have to
Hmm.
continue and say how the shares are going to be issued, either rights issue or private placement.
Uh, if it is not clear on day one, so issue of shares is, we can do the full stop off on that. And if it is clear that by preferential issue or by right issue, we should mention. If it is not clear, then you can just skip that part. Because for right issue purpose, what I understand, they are not going to ask any registered valuer report. It for preferential issue only, they generally ask for the valuation report. Then valuer have not clearly stated the face value of the instrument which has been issued. So this again we need to take care that whatever the instrument we are valuing, face value or the detailed about the instrument, like generally we value the instrument CCD, NCD, CCPS, OCPRS. So that terms and condition we should clearly mention in our report, whatever the instrument we are valuing. Full disclosure of the valid interest or conflict, nature and source of the information. Conclusion was not in separate heading, so that in initial reports that were observed. Now probably we all are taking care of that. Conclusion we are having in a last and a separately as a heading, that this is the conclusion as a whatever the fair value. Assumption limitations were not justified. Significant uncertainty was not put under the separate heading. So that again we need to take care. Extent of investigation undertaking into including the limitation on investigation set out in a scope of work. Due diligence done was not separately described. So as I mentioned, like whatever the assessment you are doing for the projections or any other section, so that you should separately describe or discuss in detail. Premise assumption were not stated in separate heading. uh Overall, if I talk about, regulator is expecting each and every section should have been explained in our report in a separate heading or separate section. Executive summary should be there. Number of typographical errors should not be there. Intended user should be there. Reasoning for adoption of particular valuation approach, it is not mentioned. So we should have a reason why a particular approach is being used and why other approaches or methods are not being used. So that is again our responsibility. While using DCF method, disclaimer clarifying whether projection used were solely provided by the management and rationalized subject to the reasoning thereof not there. So ultimately, what regulator is expecting from us, that our report should be prepared in a manner that if a common man is reading that, that person should understand the valuation in a manner that, okay, this is how a valuation exercise is being done and the fair value is being calculated in a manner properly, and common person can understand the valuation. So it's not like only Valor can understand the valuation. For the common person also can understand the valuation, report should be prepared in that manner. Any other particular point if you want to discuss in detail from this section?
Significant uncertainty
Hmm.
can be only on projections, no? Where there is a, should we put what's the
This
mandatory one?
particular significant uncertainty, I put it the same in executive summary section, where if any significant variation from standard assumption, so generally there is no any significant uncertainty or significant variation, so we mention it as a none. So in executive summary, I made a particular different section and mention as a none, so that this part can be taken care.
It can be only referred to projections, no? Significant uncertainty. What else actually?
Significant uncertainty or significant variations. Uncertainty means if there is any uncertainty or significant variations, or maybe any any significant change from normal circumstances. That is something they want to convey. What I understand from the detailed peer review report.
And another thing that due diligence is done actually was not separately described and discussed in detail. Should
So
we
that
mention it
value
as
assessment, that value assessment of the projection.
but should we mention in every report that due diligence was not done, due diligence was done like that actually?
Their projections are there, because if there is no projection used for the purpose of valuation, then this particular case will not come.
But mostly you will have projections, no?
Yeah, mostly we have projections, so that normal due diligence we need to carried out.
Can you explain a little more actually? What type of due diligence you projections is? We find it reasonable. We write that it is reasonable like that. Right?
Sir,
We mention anything else actually?
I showed you earlier also in screen. I'll again show you on a screen. Just a minute.
Like visiting the factory or business premises, etc.
Yeah, in case of land building, plant and machinery, generally that can be, and for us, like
Say like checking
yeah,
out the projections,
of the projections. So that's how generally
satisfying ourselves with the projections made by the management.
that's how we made a section separately, that based on the financial projections provided, we consider the assumption underlying projections are reasonable and appropriate for the purpose of impairment testing or for the purpose of valuation, subject to the following consideration.
Like client says that say he's going to acquire one unit, so that the revenue will be doubling or tripling, whatever it is, in the next few years, couple of years. Then we can check the agreements made by the customer with the seller of the plant or machine or whatever it is. Likewise, we can
Yes.
do some due diligence.
Yeah, whatever the due diligence we are carrying out for the purpose of valuation, so that we need to explain in our report. What can be the other reason for non-applying DCA for trading business? So, ma'am, reason we need to find out what exactly is the reason, because that will be the different for case to case basis. Sir Ravichandran sir, I think it is clear now.
Okay. Hey, good analysis. Particularly the fixed cost to marginal profit actually. That I have not seen it.
So वो डांट खा खा के सीख जाते हैं.
That's a good one actually.
I think again I shared the same. I need to share a screen PowerPoint. Okay. So now I'll, discuss few comments, direct comments, which, were there in a peer review report. There is one comment also in a chat box. Vidya ma'am, there, for non-applying of DCF in a particular business, so business reasons can be on a case-to-case basis. So that we need to understand with respect to the transaction that what exactly, what is the reason they are not able to provide us the projections. Based on that, we need to make a section that why the projections are not available. Because sometimes there are various reasons, and maximum times they they are not, they have not made the projections. Generally they can make a projections. It is not a case where projections are not available. Generally they do not want to prepare that. That's the reason actually. So I'll, we'll take a one by one comments. Like one comment was the estimated value of plant and machinery are valid only for 30 days from the date of issue of the report. So is this a right comment?
No.
This
No,
is not a comment. We cannot in any report that the whatever the value, whether it is a plant and machinery valuation, land and building, or even SFA valuer, we cannot give a validity to any of the report for a particular period. I will give
The
as on
value, the value of that asset, whether it is LNB or P&M,
or
is
SFA.
or SFA is on that particular day of valuation. So it does
Yes.
not need any kind of validity. Okay, even the
Right.
next day it might differ.
Yes, yes. So we
So
give,
no,
for example, if I am valuing a particular asset as on 31st March 2025, so that value as on 31st March 2025 will be valid for next 10 years. There is, whatever the, in a particular circumstances, if circumstances changed, so value can be changed, right? Or maybe the valuer changed, then as on 31st March 2025, value can be changed. Because the way I am seeing the particular transaction, Ravi Chandran sir or maybe Shilpa ma'am can see the transaction in a different manner. So their assumption, my assumption can be a different assumptions.
But
So
Harsha,
this
as a SFA valuer, can I tell the other fellow valuer not to do like this?
ma'am,
Like
your
when I'm
assumption,
relying on their report.
because your assumption, my assumption can be a different assumption. For example, in liquidity, probably you can take a 10% or a 15%. I will take a 20%. It is your professional judgment, and my professional judgment can be a different one. Basis of your professional judgment can be a different on based on your insight on a market or a industry. My insight or industry insight or market insight can be a different one. So whatever the industry insight you are providing, you can take a different D-log or D-lom. I can take a different D-log or a D-lom. So that variation probably we always need to take or understand.
Yeah, normally this happens when I am doing a valuation for a seller angle and somebody else is doing valuation from a buyer's angle. So you take a different assumptions. That meant to reduce the value, he takes a valuation, certain
Yes,
assumptions.
that also happened.
That always happens.
no, in that case, it is purpose of valuation is different from valuer to valuer. You are a seller for the purpose of selling and the purpose of buying. Both are on the opposite poles. So if it
That
varies, it should vary.
always happens, sir.
If it doesn't vary, there's a problem.
That will all, I am saying that even from a seller side, if I am valuing and Shilpa ma'am is valuing, even in that case also, we can always have a different judgment on a particular case to case basis. So, not a major variation, but a smaller variation can happen. That I'm saying. Then the valuer has no responsibility to modify this report for the event and circumstances occurring subsequent to the date of this report. This is right or wrong?
Is right.
Do we have responsibility to?
Yes.
So for the event and circumstances which is occurring subsequent to the date of this report, we are not responsible to the modifier. Once we have signed the report, we have, delivered our report. After that, we are not responsible for the, changing the report subsequent to the date of. Till the time report is in a draft stage, in number of times client can come to us for to change the report. But once we have, signed off, then we are not responsible to modify the report. Now, this one is important for us. The valuer, by reason of performing this valuation and preparing this report, is not to be required to give expert testimony, nor to be in attendance in court or at any government hearing with reference to the matter contained therein, unless prior arrangement have been made regarding such additional engagement, and which the valuer shall be at liberty to accept or decline.
Not tenable.
I think only the last line, accept or decline, is contentious. Otherwise, everything else I'm feeling okay.
The problem here is going to a court. It takes at least one full day if you're in the same city, or if you're traveling to attend the court session, it may take 2 or 3 days. Okay, the revenue loss because of attending this has not been included in the initial fee. So it is a matter of fee and availability. Second is availability. One is a matter of fee. If there is a separate charge for court appearance and that has been accepted in advance, then the valuer is bound to attend it. If it is not accepted right in the beginning, and he can always decline it, because that amount of fee has not been included in the original fee. Yeah. And second thing, if the valuer is a genuine case where the valuer is a quite busy valuer, and he can always decline going to the court.
Okay.
No, if we are summoned by a court of law, then we are bound to appear in the court of law. But we can have an agreement with the client that say he has to reimburse the expenses, out-of-pocket expenses and allowance for the particular
I
day.
submit that we can always have an arrangement in our engagement letter, and we can also mention the same in our, caveat limitation and disclosure, that in case if it happened that we need to appear in any government hearing or a court for the particular purpose of the valuation purpose, we will have a additional engagement for the same, because in that case we don't have option to decline. Because
Okay.
you cannot say court or any government hearings, no, that we will not appear because we have not have any additional arrangement with the client. But we can always have an additional arrangement prior to accept the engagement, that for this report, if because of any reason, if we need to appear in front of court or in front of any government regulatory authority for the purpose of hearing, if this will be the separate arrangement, and we will charge a separate fees for the same. So that arrangement we can always have with the client prior to accept the engagement, that this will be a separate engagement. It should not be considered same in same fees. And if it happened, we will have a separate arrangement in a separate fees. Fees maybe you can decide earlier, maybe later on, based on day basis, that on a daily, if it is a day hearing or a 2-day hearing or whatever the hearing, you can decide on a earlier also that on a day basis hearing, this will be my regular charges, or maybe or a per hearing, this will be my charges. But decline, probably we don't have option, because you cannot say no to the court that I am not going to appear, because
Can I add a small point here, ma'am? sorry for the interruption. It is not that the court is calling us directly. If the court is calling the valuer directly, the valuer does not have an option of saying no. But it is 90% of the time, it is the counsel for the client, okay, who wants us to support the case, okay, which means in addition to the report which we have given, they want us to be physically present, like exhibit A, exhibit B, exhibit C, okay. So if the court you calls us directly, we are bound to go and submit our presentation. But 90% of the time, it is the councils and the parties which call us.
Okay. But sir, in that case also probably ultimately court is giving direction to the client to present the valuer in front of court to give the explanation. So responsibility is us to give an explanation about the report. So in my point of view, declining is not an option with us with respect to for the court, because ultimately if we are declining and client is saying in front of court that valuer is not ready to come because of the fee reason or any other reason, it is not going to be in a favor of us that we are not presenting to the court for explanation of the report. So what I understand, we should be a separate arrangement with the client with a engagement letter itself when we are signing the engagement letter for the purpose of report itself, that if it is happening, then it will be it should be considered as an additional engagement.
Okay.
So that generally we have in our engagement letter also, as well as in our caveat limitation and disclaimer part also. Then there was one point which was made by the peer reviewer, rationale for high terminal growth rate of 8%. So personally, I have also not seen that much high terminal growth rate of 8% in any of the report. So that was again one of the reason, because 8% terminal growth rate is actually very high, and generally in our reports we need to give a rationale of terminal growth rate, that if I'm considering a 1%, 2%, 3%, or whatever the percentage of terminal growth rate, what is the rationale behind that? How I'm considering the terminal growth rate of the particular percentage. So this is again on a lower side. If you are considering that, also we need to give a rationale. If a higher side you are considering, that also rationale we need to give that. Generally, terminal growth rate, what we are considering, 2 to 3% or sometimes 4% that we are giving. 1% or higher side, maximum time regulator will ask you how we considered the same. Based on industry rationale we need to give. For example, if I talk about food industry or restaurant industry is something, a kind of industry where initially you will see a growth like spike like this, but later on a steady growth. Because what happened generally, a new restaurant opened in a town or a city, everyone wants to go there and everyone wants to taste the food, that what type of the food is there. But later on the growth is steady, because every time what we want to go for a new place, and then only just normal customers, or sometimes just for the purpose whenever guests are coming and food is good, then only we are going to the same new place. So in restaurant case, generally 1 or 2% growth rate is being considered normal. So if that kind of the industry, I'm giving a higher terminal growth rate, 4%, 5%. So that rationale we need to give, that why I'm giving a high growth rate of an industry. So 8% is actually a very high growth rate.
But we take 5%, generally, it is below the GDP growth rate. That's a benchmark we have actually.
5% is again, we can sometimes justify for a particular industry, but 8% is, sir, actually very high.
Yes.
8% is high,
whatever
but
the time-
5% is wrong, or 5% we apply uniformly because
based industry you
GDP.
need to justify. Yeah. GDP, and again, as an industry, you need to justify. Again, when the discount rate used itself 9.85% is not explained ideally the key valuation. So whatever the discount rate we are calculating, we need to give a calculation how we have derived the discount rate. So complete calculation we should give for the purpose of discount rate. How we calculated. Generally what we have seen in a report that we are not giving a complete calculation of discount rate, how it is being calculated. Only we are giving that this is the RFR, this is RM, and this is how we calculated. Ideally, we should give a complete calculation. When I'm saying complete calculation, each and every part of the discount rate. I'll show you on a screen, just again, one report I'll show you. So here you can see like determination of first formula has been given, that how the formula is being used. Then computation of cost of equity, capital asset pricing model. So risk-free rate 10%, beta, market equity and asset specific. Then for risk-free rate also, it is being considered 8.6.58% based on 10 years bond. Then market risk premium based on Sensex 20 years. So how it is being considered, risk-free rate, how it is being calculated. For beta also, complete calculation is in there, that these three companies are being considered, their levered beta is there, complete levered beta calculation is being given. So full calculation you can see here. Then determination of average cost of debt fund, so is given here. Then specific company risk. So here specific company risk considered 5%. What is the reason of company specific risk? So because it is a regular transaction, earlier company specific risk was 10%. This year we reduced the risk 5%. So the rationale of revision is also given. What is the reason we reduced from 10% to 5%? So that rationale also we need to give. Then calculation of adjusted pre-tax WACC. So that's how you need to give explanation of each and every component, how you calculated, so that any person who is reading your report can understand that how a particular component is being calculated. This was a comment from IBC report, ambiguity on liquidation value, where the liquidation value of all asset is more or less flat 70% of corresponding fair value of each asset. So this cannot be cannot happen flat 70%. We cannot give to all type of asset. It is not possible that I am giving flat 70% to all the asset. Again, a rationale should be there if a flat 70% is there. So that we need to understand, and accordingly we need to give a reason for the same. Financial for the period of April to December not mentioned anywhere, where valuation date was 31st December. So again, that we need to take care, just a clear mistake on a valuation report side. A risk-free rate has been taken up as a government bond, not SBI fixed deposit rate. So that is again a mistake. Beta 3 we cannot take. It's a very high risk, because we cannot say just a risky startup. So we considered a very high beta. Again, a rationale behind that should be there. History section, it is mentioned that company may touch a 10 million turnover in 21-22, whereas cash flow was again having a January to March 10 million. So it was just a clerical, or maybe you can say negligency on part of the valuation. So that was one of the mistake. Just common mistakes I have just picked up from the peer review. Market approach, it was mentioned that comparable transaction is not available. Whereas if we see that particular valuation, there was many comparable transactions were happening in a edtech sector like Byju's and Academy, Whitehead. So it is just up to us that from where we take a transaction, what type of the subscription. And now, if I talk about, there are multiple way out where we can have a transaction details from a websites or from a portals on a very minimum subscription fees. So that will give your report a very heavy weight in terms of when you are presenting to the client, because earlier I understand the subscription fees was for a few of the portals were very high, but now there are certain portals where these type of the reports or the transaction details you can get easily with a very less or very minimum subscription fees. This was again example of that validity of report for the 3 years from the date of report. So that was mentioned in a valuation report. Whereas we all know that provision of requirement is only 3 years, not a validity of report. So it is again misunderstood by someone that 3 years is to maintaining the record, not the validity of any report. So that we need to take care. So just few recommendation that whenever we are preparing the report, projections, we need to ask if any of the client is saying that it is a price sensitive information, I will not able to provide you the information, just tell them we are ready to sign the NDA. If you think that we will share that, okay, I'm ready to sign the NDA, and everyone is providing that, and please provide that, because that's something which you can provide them as a comfort, and then you can carry out your transaction. Justification of using discount rate should be there, so detailed justification should be there. Declaration regarding compliance of VS, that also we need to take. COP number we need to mention. Registration number along with identity we need to take care. Mentioning the purpose of valuation, reproduce the section, also that we need to take care. Extent of examination, NAV method, mention of tangible asset, non-current asset, executive summary. So executive summary will give your report, heavy weight, so that, okay, someone is reading your report, have an executive summary, will give a comfort to the reader that, okay, this is something my fair value, which is available on a first page of report. So that always you should give or you should provide in a report. And fee structure of the reviewer should be provided in some of the profession. This recommendation was there in a peer review. I am not comfortable with that, but because that was there, just I reproduced that. I'm not sure why someone was, pushing us to give a fee structure. I don't know how it should be given in a valuation report. So in terms of do's and don'ts, we should demand the relevant information. We should gather the information which is provided, not generated by the valuers. We should mention it that clearly. Do care, we need to take care. Diligence, efforts, that is being expected from us. Significant inputs, we need to provide. Credibility, and we should, professional judgment is something that we need to apply. In terms of don'ts, so we cannot deny duty of care. We cannot disclaim the liability of our expertise. We we do not rely blindly on the information which is being provided by the management. So the example which I was, again and again showing on a screen, the projections, probably you will not rely that projections was revisited 4 times before, I made reasonableness, because earlier that projection was stating that 90% cost is, revenue will be, the cost of revenue was 90% of the revenue. And I was like, if any industry is working on cost 90% of the cost of revenue, I would probably will not be involved myself on that kind of the business. I will not work on 10% of the gross profit. My gross profit should be at least 40%. Then only I will involve myself in a particular business. Then they revisited their, bill of material again and again, and they come up with their 60% of cost of revenue. So this we need to sit with them for their projections, make them understand that somewhere you are making a mistake. And they were like, no, our cost projections are right. That company is actually a Japanese company. So they're saying that our Japanese people has approved the projection. You need to work upon that only. We cannot go back to them to review that or even this is not right. These projections are somewhere wrong. How a particular company can work on 10% of gross profit. You want a company to run on loss? How from 10% of other, you will do the other expenses and then you will earn the profit also. So that's not possible. So we cannot rely blindly on the information which is given by the management, and not using professional judgment and not doing the necessary inquiry inspection. That is again a part of our job. One recommendation I actually removed, that's a 4 recommendation actually. So technology is something that we need to adopt. AI is going to help a lot to us, because for last 2 months I'm using that, so I understand how it is going to help. Because the deep research part is actually helping a lot to prepare the report. Whenever I need help of market research, industry research, that deep research is helping me a lot, giving me a data insight, which is making my report, making my part easy. Enhance the client experience when I'm adding these things in my reports. Reduce time scales, so that I have shown you on a screen that how it is reducing my time skills and updating your skill set. Many time it is happening actually whenever the complicated valuation is coming. So even I am not able to understand how to start. So I am asking that how I can start this valuation, how it can be done. So again, AI is helping. This is something, a method you can apply. This is something you can start. So that giving me food of thought. Then I'm applying the mind, starting working on the valuation models, applying the same in Excel, starting creating model by myself. So at least it is giving me push, giving my boost that okay, let me start. So the methods or models, earlier I was not working, I started working on that model. So corporate guarantees, where I was not working earlier, now I started working earlier because now I started understanding because of that only. So technology is something which can help you a lot in evaluations, which for last at least 3 to 4 months helping me a lot. So this was from my side. Now I am open for the queries. Just please let me know if you have any queries or anything you want to discuss. So we can discuss now. Any doubt or any queries or anything you want to add on any points that we discussed from your experience?
What are the AIs you are using apart from Chat GPT or something?
Yes, for deep
Any-
research, what AI are you using?
Yeah.
Sir, in Chat GPT itself, there is an option of deep research.
Okay.
Okay.
Yeah. So that is helping me a lot, because that deep research is actually doing a research from various platforms, giving you an insight from various, websites, and giving you a background with the transactions also, with a source of that website, that from where that particular data they have picked up.
Are you
Sometimes
using the free version or paid version?
It's a paid version, sir. I'll just show you one example. I just yesterday only did one research on that part. Just let me show you on a screen.
I think free version gives you about 5 deep research or something like that. That's what I remember.
Free version also, but in free version there is a limitations actually, because there are certain prompts you can give. After that it will be not giving you a certain responses. So that's a, and in paid version it's only 1500 per month that you need to pay, but in 1500 per month you are able to get your reports in such a manner which probably I was even not expecting. So I started paying that because it is helping me a lot. So this was yesterday. I just did the one deep research for my one CCPS accounting and evaluation for the audit support. So it was again for the CCPS, where transaction was like on 31st March 2025, their conversion was due. But because formula is saying that the conversion will happen based on EBITDA, and because EBITDA is not closed, their closing is not happened, so that's not possible. So all these prompt I have given to the chat GPT. So based on that, this all deep research, they have included the Ind AS 32, 109, 113 example of the market practice in India. So the advisory note includes these 4 pointers. I have given these 4 pointers. Detailed interpretation of Ind AS as they apply to CCPS, emphasizing the classification. Example of the market practice in India, how similar CCPS instrument has been classified and accounted. For example, financial liability, equity by other companies. Evaluation of the valuation model beyond simple DCF, binomial option pricing model for measuring, and key consideration and disclosure for the financial reporting as on 31st March.
Have you included these points in your report or auto-generated by ChatGPT?
I just did this deep research. Now I will read it first carefully, what exactly the research was being done. Then the relevant point I will introduce in my report.
And how accurate is the ChatGPT prepared report?
So for that, I see, whatever the Ind AS part, I, refer the Ind AS section, that whether it is right or not. So, because as a chartered accountant, I practice in the Ind AS, so I can refer always. For market perspective, I try to get it data from the source. So you can see these all sources also they mentioned that from which particular source it is giving me the research. So if the source I find the reasonably reliable one, then only I am considering, getting using that extract. If somewhere the source I am not comfortable, then I'm not using that particular research for the purpose of my report. Like if it is from Textman, so somewhere I'm comfortable to use that resource. If it is from any regulatory resource, regulatory website, then I'm comfortable to use that research. If it is not from any regulatory resource, then I'm not using that. So all resources are also used, mentioned in a research. And when you read it many times, you always get a comfort whether it is being, and also for the research, I give it my source document also. So my terms and condition of the CCPS also, I have uploaded the document here in a chat GPT. So it is not like without any source document this research happened. I have given it through the source document also, that this is the CCP document which you need to use for the purpose of valuation or for the purpose of research.
Which GPT is reliable and cheaper?
Which GPT means, sir?
Which AI tool is cheaper and most reliable?
Till now, I am using this only GPT 4.0. So this is from Ind AS part. Then presentation part, it is being concluded. 109. So it is complete detailed research. Now I have a full research with me, which I can use in my valuation report. This is market practice example. So it has given that Happiest Mind Technology, they had issued the similar CCPS. So it all resources. So I can go on a Happiest Mind website. I can check in their balance sheet whether what was their instrument, how they have accounted, what was their terms and condition, then Tata Steel, BSL. So at least when the discussion is happening with the auditors, I can also quote the same example. I can give them the documentation because now I have a source also. It is not
Are
like
these, are
source I
these
am.
sources available to the client also when he reads the report?
Sorry, sir.
Are these sources available to the client when he checks the report or reads the report?
Sir, these all sources are mentioned here. When I am discussing with the client, I keep all these sources with me in hand. So if client is asking me for the source, I am producing all these sources to the client. So that if client want to refer that sources, he can refer and he can also use these, or he can document these sources in their documentation. Then disclosure practices, then financial reporting consideration, and
Harsha,
after,
one point,
yes, sir.
as you have mentioned that when you are having a discussion with the auditor, you can mention all these things. One thing I just want to ask, because you have prepared your report and you have made your working sheets also, because many points you have already covered in your report. So if the auditor asks all your Excel sheets, is it advisable to share with them, or I can totally
Sir, I can run through them with my working on whenever it's required, but generally we are not sharing our work papers with the client, Excel sheet.
correct. See, my report, as your report is very comprehensive. I don't think the working sheet should be shared with the auditor.
That we are not sharing. That we are not sharing, sir.
Right. Thank you.
Yeah. So here sources are, as someone was asking, so all sources are mentioned here. So you can see that all sources, so they are also referring the IFRS, the ICAI schedules, guidance note. So most of the sources are the reliable sources. It is not like these are not reliable sources. So it is somewhere now helping me. Otherwise, I personally, individually, I need to go through on a particular source, then I need to refer that. So somewhere it is helping me, supporting me, saving my time. So that's how probably we can use the technology and AI to support us in terms of preparing report, making our work paper strong and our argument strong whenever we are having with the client and the discussion with the clients and the auditors.
Sometimes the comparable companies are have you tried actually, because I find that they are not updated or they are not correct also.
Sorry, sir.
Comparable companies data actually you take from Capital IQ and this one through AI. I find that there are huge differences.
Yes, Capital IQ is always a better one, but their subscription is again because I have the subscription of Capital IQ also, and there is one more subscription that we have. So there are 2, 3 subscriptions that generally we use. So multiple sources that you can always use for the purpose of valuations. So whenever it comes to the market approach, Capital IQ we always use. Whenever it's come to the presentation part or drafting part, so for drafting purpose AI is something that we can now you can use, because earlier what I understand, my team was not that much good in terms of drafting. Now how they are using, preparing the reports and drafting the reports in an effective manner. So this was from my side. Any other input from any of the participant side or anything? Presentation I will share with the coordinators. So probably they can share with the participants. Presentation is for all of you only.
Dear participants, are there any other queries, questions?
And thank you so much for all the comments. Thank you.
And it is our pleasure to have your session, Harsha Madam. As it is wonderful, though we know the intricacies of preparing a well-drafted report in bits and pieces, but you have presented in a very scientific way as to how to avoid mistakes and how to have a full coverage as per the requirements of the IBBI or other regulators. So you have put it in a very scientific way, and you explained with say live examples or the methodology which you scientifically follow. You have covered the peer review key considerations like evaluation methodology as changed and in inputs, consistency with the standards, accuracy, completion, clarity, and transparency. Then you have pointed out the various deficiencies generally we commit and which have to be avoided. You have also presented the do's and don'ts, and you have given 5 very effective or very useful recommendations for us. And you also thrown light on the usage of effective usage of AI tools like particularly the ChatGPT, how we can improve upon it, and how we can explore the new sources of information, and how effectively we can put forth our arguments or the basis of our valuation or facts and figures, etc., by using ChatGPT. And it is a wonderful experience for us to have your session. And since you told that you are not a member of BVA, I request you to become a member of Bangalore Value Association. And say, even though there may be earthquake or flood or whatever it is, or a festival, but on every second and fourth Saturday, the webinar happens. Say, since the inception of this organization, these webinars are being conducted punctually between 7:30 and 9:30, and we request you to be a speaker in our future sessions also, and we request you to attend and become a member and recommend to other your colleagues also. Now we have started separate memberships in not only individuals, as a financial institution also you can join our BVA as a member. So there are some different categories. For the students also, we have started a new category. And as a token of our appreciation of your sparing your valuable time and enriching our knowledge, we are presenting one memento to you. It will be couriered to you very soon. And this is the graphical representation of the trophy to you. Memento to you.
Thank you, sir. Thank you.
Thank you, participants, for your active participation. And today there is a good number of participants attended the session, which shows the interest and the quality of the speaker at delivery.
Shivprasad, one small thing about the AI is that if we don't use it, our client is going to anyway use it and verify our report with that. So it's better to preempt that, and then we only use the AI, and then rather import whatever data is required into this our report also.
Yes, sir, that also can be, a good option, because this is also, we generally do that whenever we are preparing the report, we try to get it verified that whether all possible methods, approaches is being used, or any other thing which we are skipping or can be considered for the purpose of particular engagement.
Probably today's topic itself, the heading itself should have been changed, actually, because it's not just peer review. What you have covered is, much more than that, and very useful. I hope everyone will agree that. Actually, the peer review, many people would have thought that it is very confined to peer review, but it is not so actually. It's a wonderful one. Thanks.
Sir, I thought it was important, or maybe, it's, if I can share with you, all of you, so that's the reason I shared.
Please share the PPT.
Thank you.
As you have promised.
Yeah, I'll share the same, sir, with coordinators. Yeah, so if you want, I can share in a chat box, so that's not an issue for me. Or as per the protocol, I can do that.
Better share with the coordinator so that she will put it in the WhatsApp group
WhatsApp group.
so that everybody will have it.
Yeah, so I'll share with the coordinator, sir.
Yeah.
Okay. Thank you, everyone.
Now
Thank
we
you. Thank you
conclude the
so much.
session.
Yeah. Thank you.
Thank you, everyone.